Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Wednesday, the 27th of August, 2025. So as we talk, my friends, there's a lot to talk about. NVIDIA came out with its earnings, and by any other company, it would have been considered good, but it's NVIDIA. And therefore, it's not as good. They didn't do any sales at all to China. Nothing in the quarter. And therefore, the market's a miss. Some traders thought they'd do 1 to 2 billion. They did nothing in it, and that's not a surprise. They'll probably do something in the third quarter, but we'll see. So the index fell back that's heavily weighted with it, but your other indices, they're not doing much one way or the other. The gold is still an inflationary target, and it's been that way since the Fed chair talked in Jackson Hole, and he said he expects inflation to accumulate. The Fed's focus is now on labor, not on the inflation. They expect that to go up a bit, and they're going to see what it does over time. That's a go signal as far as I'm concerned for inflation and gold. In the foreign currency market, it's a bit of everything, every which way. It's a churn. September's known for that. The A-League traders aren't back yet. They'll come back right after Labor Day around the world, and it starts getting more interesting at that point. All right. So what do we do about all that? Well, let's go to something here. First off, one of the things I want you to do is join me in the morning in my futures video where I'm saying buy here, sell there, do this, do that. It's very detailed. We track trades from beginning to end. I give you all the chart reasons why I'm seeing what I am and a lot of things you'll never see in these videos. You can also do the same for the Spider ETF or the combo package where you get the two. Think of it this way. We're giving a third off, so you're getting 3 months for the price of 2 in this, even the full research, my twice daily written update in the futures, and the same in all the courses. We're taking a third off. Don't expect this to last. Labor Day is when the game is over. So do it now. You'll forget it. There's a cursor up here you can click, an icon actually with your cursor. And right here, it's iraepstein.com, and just go to courses or research. Everything's there. You don't need to do any coupons or anything. The system's set up, but it's a system set up to turn it off on Labor Day. So please do it before that. In terms of news that the market's got, let's take a look at that. You got the second quarter GDP expectations coming out. It's the second look. This is the revisions to it. Weekly jobless claims, they're looking for about 5,000 less. National Association of Realtors, U.S. pending home sales will be released at 9 a.m. They're looking for a forecast of what's going into the storage for natural gas. They're looking for 28 billion cubic feet. And the KC Fed manufacturing composite and business activity indices, they're going to be coming out at 10 in the morning. All right. So let's go back, if we could, then to the chart action and see what we've got here. When we look at the S&P itself, if it were to finish the week out right here, it'd be up 0.7%. You can see how the market's just marching sideways. It's at a resistance point. You and I have talked about that in these videos. I said, you're not running at this point. NVIDIA didn't set off the run today. That's certainly the case right now. Higher lows, higher highs, still bullish. The market's over the 18-day average. The bias is up in the market. The resistance is the upper Bollinger Band, which would be up by a high there of 65.38, and the support's back at 64.38, a 100-point difference back to the 18-day average of closes. And the momentum in the market is overbought, but trying to put both numbers over 80 and begin an embedding process. When we take a look at the NASDAQ, the whole battleground is the 18-day average of closes. You've been stuck at it for a week. We'll see which way it pulls out. Right now, higher lows, higher highs, back under the 18-day average intra-evening. I don't know what we'll wake up to in the morning, but if the market clears, yes, the highs of today, it sounds funny. Remember, we're already on Thursday trade. If it clears Wednesday's highs, that will be a very positive signal, and be careful, that market can run on you at that point. When we look at the Dow, higher lows, higher highs. I saw that snow, by the way, did very well. So certain parts of the that came out with earnings today look pretty good. I'm still feeling good about the markets. They're looking here. This is the weak time of the year, and I want you to look at what you've got. There's nothing here that's looking bearish. The same in the Russell. I am so glad that all the way back here, do you remember in the summer, I changed my attitude. I said, now it's pickup sticks. And traders are going to say that they're going to go and move into the Russell because everything else is getting too highly valued. And that has gone on all the way through. Yeah, you get bumps in the road, but that's still the thinking in the market. In the DAX, well, the question was it going to get up and clear that high or get back down there? Once it got back down there today and took out yesterday's lows, it just let go. Does it have enough momentum to get to the Bollinger Band? That's the question. It easily could. In the 30-year bonds, you still have the resistance of the 18-day average. This is such a broken record. It's unbelievable. Look at how it keeps hitting the 100-day average. It's stuck. Wait for it to tell you which way it wants to come out. The 5-year, which is now sensitive much more than the 30 to whatever Fed actions are, back up to the Bollinger Band, trying to break out of this trading range, hasn't shown me that it can do it yet. In the dollar, you had a key rally today. This is everything I teach in my charting course, that if one were long, the 100-day average and the Bollinger Band resistance, you went right there and you pulled right back to the 18-day average of closes. You yesterday, or today I should say, got to the lower Bollinger Band, covering all shorts the trade, probably going right back to that 18-day average here. The British pound, a lot of talk now because of what's going on with inflation picking up again, that they are not cutting interest rates again anytime soon. I'm talking the Bank of England. They've got minimum wages that have kicked in, higher taxes, and it's pushing on the market. So I think the pros are buying this market on the break here to 134.72, and they'll bail if you get under the lows that we saw today. I think that would be a number that you just go, okay, that market's not able to hold. Then you have to change your opinion. Bitcoin, I'm still bearish. You have readings that are trying to embed. When they lose that ability, I'll get interested in the market, but not while it's ever present. On the energy market, look for resistance at the 200-day average to the Bollinger Band in an overbought market. It keeps pulling back to hold the support of the 18-day average, as does WTI. They're like mirrors of each other right now. Rebob gasoline pulling into support, not resistance, support of the 18-day average to the 200. I expect to see the pros trying to nibble away at the market there. And in nat gas, you lost the bearish embedded reading. I would be doing this to all shorts. Let somebody else carry it. You've now given the first sign not to be short anymore in a long time. That doesn't mean I'm bullish. It means I don't want you to be short. Basis what I'm saying. You decide what you'd want to do with that. Once again, take advantage of the sales that we have. Move your cursor to the top or iraepstein.com. Go there. I'll see you in the other videos tonight, I hope. And of course, first thing in the morning, when we do our morning flash video, let's hope all these videos post right. We will check them. I'm Ira. Have a great evening.